Hello there, this is James and you're watching Ask James. Now, as you know, this series is a little bit different from the Tixee Live series. This series is more focused on education. And today's topic is going to be Introduction to Fibonacci Retracement. Now, before we get into all of that, of course, before we start, don't forget these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. That was a good one, wasn't it? Right, anyway, let's get started. So today, like I say, it's Ask James. And today's topic is Introduction to Fibonacci Retracement. This was actually sent in by viewer Euro Sharp Shooter, which I think is a cracking name. And I'm really grateful for this topic, because don't forget these little videos, especially Ask James, they do rely on you good people sending in topics you want us to do a live on or want us to discuss. So a big shout out to Euro Sharp Shooter on that. So anyway, let's get started. What is Fibonacci retracements? Well, Fibonacci retracements, okay, is based upon the Fibonacci sequence. Now, this is named after a gentleman called Leonardo Pacino Bigelow, who was famously known as Leonardo Fibonacci. This guy was a 13th century mathematician. Now, he discovered a very simple series of numbers that could create ratios which would explain the proportions of things in the universe. Now, there is a debate, just slightly off topic, there is a debate whether or not he didn't create it. It was actually created, 200 BC and used in the Indian community. And he just basically brought this calculation to Europeans. But anyway, we're not here to discuss who gets gloating rights of who created it. But anyway, they think this series of numbers can create the proportions of things in the universe. This ratio is created from the following numbers: 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, and 233. Here, each number is equal to the sum of the two preceding numbers. Okay, two preceding numbers. Now, don't worry. I'm not expecting you to be or become a mathematical genius and to do this. Don't forget, when it comes to trading, we have our technical indicators who do all the calculations for us. But anyway, these numbers, or this sequence, as a result of a mathematical relationship found in this formula, it produces the following ratios for Fibonacci retracement. And these are the ratios which are used more frequently in Fibonacci retracement. Okay, you have 23.6, 38.2%, 50%, 61.8%, and 78.6%. So those are the Fibonacci retracement ratios. Now, the question is, of course, sounds all very complicated, James, but what use of it is to a trader? Why do traders use Fibonacci retracements? That's the question. So what we're here to talk about and do an introduction on. Now, the reason why traders sometimes use Fibonacci retracements indicator is because they think it can help them calculate potential support and resistance levels. Okay, so this is why, again, it's when it comes to technical analysis, it's often always about either determining the trend of an asset or indicating, if overbought, oversold areas as well as resistance and support levels. Because don't forget, resistance acts as a ceiling where something could be sold off again. Support acts like a trampoline where an asset can come down, touch it, and bounce back up again. So this is what technical analysis, majority of it, is used for. Okay, so Fibonacci retracement uses horizontal lines. And of course, obviously, I'll show you examples. We'll go through some examples together. Now, these horizontal lines indicate potential support and resistance levels based upon the ratios I just mentioned, based upon 23.6, 38.2, 50, 61.8, and 78.6. Okay, so these indicate potential support and resistance levels. Now, you don't use Fibonacci retracement in a ranging market. You use it when the market is trending. So it's for trending markets. Okay. And basically how you find the levels, and like I say, we'll go through some examples together in a moment, but basically how we find the levels is we connect, if it's an uptrend, if we can identify, first of all, of course, we need to identify if it's an uptrend or a downtrend, of course. And don't forget, an uptrend is 2 higher highs and 2 lower lows. And a downtrend is 2 lower lows and 2 lower highs, in the basic theory of things. But obviously, we can use our naked eye as well to see if the market is doing this direction or that direction. But in an uptrend, we can connect the low to the high. In a downtrend, that's like, let's start again. Sorry, yeah, with an uptrend, you connect the low to the high. And the idea is then, if you are watching there, if you are spotted an uptrend and you're using the Fibonacci retracement, the theory is the horizontal lines indicate potential support levels, meaning a possible long opportunity. Now, a downtrend is the opposite, surprisingly. You connect the high to the low. And again, the idea is on a downtrend, the retracement levels can indicate potential resistance levels, and meaning, which of course, again, we can see a possible short opportunity. So potential resistance, don't forget, it hits the ceiling, comes back down, so potential shorting opportunity. So this is what is potentially indicating to us. Now, again, we'll have a look at it. Let's show how we do it on our chart, and then we'll go over a couple of other things. So let's pull this up. Okay, so let's have a look at the let's have a look at the S&P 500. Okay, this is on a daily. Okay, so you see the high in December, around about December the 30th, 2021, was around about 4803. Okay, and clearly since then, it's been a slight downtrend. Well, it's a slight downtrend. It has been on a downtrend. We're in a bear market. What am I talking about? So let's have a look at some potential levels, how we would put the Fibonacci in. So we click on the Fibonacci, which is in the corner here. Connect the high, remember? We connect it to the low. And straight away then, this is indicating us potential resistance areas on this downtrend. So we would be looking at 23.6, which is this area here, 23.6 as a potential resistance. Okay, so that's how we'll be looking at. If we want to do maybe a shorter time frame, and say if you're a shorter trader, not a shorter trader, I'm short, I'm 5'5", but say I'm a short-term trader, I mean, then we can obviously look at a different time frame. So let's look at 1 hour. Okay, 1 hour. All right, so got the high roughly here. So we go again, put the Fibonacci in, got a high to connect it to the potential low. And in the short term, because it's a 1 hour chart, not a daily, this is again a potential area of interest. And as we can see now, basically we can see in the past as well, around that area, we can see that the S&P has found some form of resistance around 23.6, which is 3,666 points. Okay, so we can see again, that is an area of interest. Let's have a look at something else. Let's do a different currency pair. Let's do the sterling. Because let's face it, everybody's talking about the sterling. Let's do a daily though. Look at the long term. I do like using the Fibonacci for the long term. I do. I do. So that's okay. Let's have a look at long term. Let's go from this high here. So back in say early January, again, like we did with the S&P, for the beginning of the year. Okay. So again, click on the Fibonacci, go around about here, connect it to the low, and obviously we know that obviously the sterling has seriously been on a downtrend. So as we can see again, the first potential area of interest is 23.6, which is 1.12010, a potential area of interest there. And as you can see, we're dropping below that now. Now here's the other thing. Looking at it aside for an uptrend, let's look for something which is on an uptrend, which realistically there isn't a lot of things on an uptrend at the moment because we have a strong US dollar. So let's have a look at another example. I've got another example, but I want to show you and use it as something else actually. Let's have a look at, so let's look at the euro dollar. Again, we're on a downtrend. So I was trying to hopefully try and find something on an uptrend. I've got one asset on a serious uptrend, which I can use to combine with something else. But let's have a look. We'll put the Fibonacci. Let's chew again. The beginning of the year, so the high here, connected to the bottom. And again, all right, we can see potential area of interest is 23.6, followed by 38.2. Now, this brings me on to my point. I want to come back to this again in a minute. Now, here's the thing for me. Fibonacci is, it's sometimes can be like a self-fulfilling prophecy. Wherever people are seeing it, and that's how it then reacts as a resistance and a support, or potential resistance and support. It is definitely not foolproof, though. By a long shot, it's not foolproof in one way or another. Because the reason for it is that, it often can break through these levels. So it doesn't give you the 100%, when nothing is 100% in trading at all. Okay, because obviously trading is not that easy. And this is why you always need to have a firm understanding of certain things about it. So it's not totally foolproof at all. So my way of looking at it with Fibonacci is not necessarily telling me to look for a ideal support or ideal resistance. Instead, it indicates to me a potential area of interest. And this is where it then, it does become useful, is because if you can combine it with maybe possibly looking at areas where there's been selling before or buying before, and it connects to that level, then indeed it does sort of give you a little bit more of more of an indication that that is an area of interest. Whether or not does it align up. Now, I want to go back to the euro, and I'll show you an example of this. What I mean by this. Okay, so if I pull up the euro, okay, don't forget, we've just put the Fibonacci in, okay, from, say, the high in January to the low back in September, okay? And as we can see, the areas of interest, realistically, is 23.6. We can see 50 is a bit interesting as well, and 38.2 is a potential area of interest for potential resistance. Now, what else can we see around these levels? Can we see, without using the Fibonacci, can we see people buying or selling from there? Don't forget, this is on a daily. And like I say, as we can see, actually in the past, hasn't held all the time, but in the past, don't forget this is on a daily, this area indeed has seen some selling. So it has acted as a resistance, as we can see from here. And don't forget, we've only just put it in. Okay, so if we go here, we can actually see, actually there was some selling around that area. Look, wrong one. It's horizontal. As we can see, there has been some buying and selling from that area. Does line up with 23.6 number, so it is of interest. Again, we can have a look here, 38.2. Okay, it has acted as an area of interest. So we can put another line in there, which again gives us maybe a potential indication that is a potential resistance there as well. So it does add up. So really, it's a case of trying to combine what you can see where there's been buying and selling, and if it lines up with the recent Fibonacci retracement you've put in. So that again gives you maybe, like I say, an indication that is indeed an area of interest. And there's something else I want to show you as well. Okay, using it with trend lines. And this is the one asset I know is in a pretty strong and a pretty bullish uptrend. Any guess what that instrument is? So I've talked about it a fair bit in some of my tixee live episodes, certainly over the last couple of days. And that, of course, is the dollar yen. So let's have a quick look at the dollar yen. So let's have a look at the dollar yen now. And again, it's 51.8. My. They are really pushing the Bank of Japan, aren't they? They're really pushing the Bank of Japan. So as you can see, look, we have got our trend line. I put this trend line in quite a while back, and I've kept it there because I kept my eye on these areas of interest. So let's put a Fibonacci on an uptrend in. So let's connect from this bottom here, connected to so far the top. And as you can see, 23.6 does indeed align with that trend line. So again, the stars are almost lining up. Wow, dollar yen. Yeah, indeed. I've talked about that a lot over the last couple of days. So as you can see, yeah, 23.6 matches up with the trend line. So yeah, definitely a potential area of interest. 38.2, again, lines up with that trend line. Again, potential area of interest. 50, yeah, so like I say, it dipped below that level at some point. So not since the 1990s. Not since the 1990s has the dollar yen be trading at these levels. Yeah, not since the 90s. So it's like a 34-year high. So like that. So again, like I say, in 61.8, again, would be an interest. We can line it up with the trend line as well. So again, this is how you tend to use it with trend lines as well. And like I say, again, my biggest grumble about Fibonacci, same with all indicators. I underline this. Same with all indicators. They're not foolproof. They're not foolproof. So you do need to, I mean, I'm not a big fan. Excuse me. I'm not a big fan. And again, it's just my personal opinion. I'm not a big fan of overloading my charts with so many indicators. You know, it gets too noisy. I prefer to use and look at it almost not like naked, but with a few indicators only to try and give me an idea of the direction of an asset or where there are potential areas of interest. So again, like I say, the Fibonacci is not foolproof by a long shot, definitely not. But if you use it with maybe say channel lines or watching for areas of interest and it lines up, then indeed they are proper areas of interest indeed. So anyway, that's Fibonacci. Like I say, it's only an introduction. These are little bite-sized pieces of education. The hashtag Ask James episodes. I will be doing a brand new series, which I will be announcing on Monday, which will be in a lot more detail and a lot longer, and we'll really go to like the meat and potatoes on these subjects. So please look out for that. And I'll tell you more about that on Monday. But like I say, this is like a little bite-sized piece of education. Don't forget, you can ask me questions anytime you wish, anytime at all. Or simply say hello if you like. Simply say hello if you wish. It's entirely up to you. Or like, don't forget, you can send in other topics. Entirely up to you. Don't forget, like I say, you know, these little broadcasts are relying on you guys and you ladies and gents sending your topics and your ideas of what you would like to learn about and what you want me to talk about. So please, hey James, thanks for the videos. You're more than welcome, and thank you for coming. I really appreciate it. So yeah, you bear in mind you've got that option as well. You know, send me and look forward to your announcement on Monday. Yeah, it's like I said, just a new education series I'm going to announce. So you know, exciting, but exciting enough. Anywho, like I say, if you have a suggestion for a topic or you think of a question later, you can put it in the comment section, either on Facebook or YouTube. I will see them and I will discuss them next time I go live on air, which of course will be in about just over an hour's time to do the US session, 2 p.m. UTC. So please come and join me for that. And please keep on. Will I still be continuing hashtag Ask James? Yes, I will be. I still do an episode a week with hashtag. I might just do maybe one every couple of weeks, depending on the topics that people send in, of course. Yes, because like I say, hashtag Ask James is bite-sized pieces. The other one is going to be a bit more detailed. So, you know, some people, they like to watch just a bite-sized piece. That's why we do hashtag. And the bigger one, people might want to watch and learn and go in a little bit more neat and gritty. Plus, don't forget, I do like part ones and part twos with the hashtags, you know, because there's not too much overflowing with information on the first one. Instead, we give it to you in bite-sized pieces so that you can digest it a little bit better. Because otherwise, if you're listening to me talk on for an hour and a half, you might not get all the information in the right way of getting the information in. So this is why we do it in little bite-sized pieces. So bear that in mind. Actually, I'll quickly show you something else. Actually, remember I was telling you to connect the dots, the stars aligned. I just brought up gold because obviously those people who know me, I'm a big gold bug. And this is interesting. These are the sort of channel lines I put in ages ago, where I saw potential resistance and support levels, areas of interest, as people I often call them. So don't forget, if we do the quick Fibonacci one here to the low, as you can see, they pretty much again line up with the Fibonacci levels. So that's quite interesting. Again, like I say, I'm using the two indications there. So it's quite interesting. Anywho. Okay, don't forget, I'll be back online again at 2 p.m. UTC, so please come along and join me for that. To talk about the US session. Interesting to see how Twitter is after what Musk said earlier on, and obviously the US watching him now. So that'll be quite interesting. Obviously, Snap, which crashed in the pre-market, that is. Let's see how that opens and everything else. But anyway, till next time, don't forget, if you're asking me, it's hashtag Ask James. If you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it interesting, useful, and you've put up with me, my over top enthusiasm, then simply give me one of those. See, I've actually got a love heart. Anyway, give me one of those. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.